Nigeria has an emerging middle class eager to shop in modern stores and is attracting many of the world's largest companies, while the country has a shortage of all types of modern space, however, raising the likelihood that the market will favor landlords for years to come. Well, meanwhile, in Accra, Ghana, the supply of modern retail space remains limited, and traditional retail units and street hawkers continue to dominate the city's retail offer. Well, to review Nigeria and Ghana's retail property markets in the first half of 2013 and what is expected over the rest of the year, I'm joined in the studio by Adeni Adeleye, the head retail estate finance at Stanbic IBTC. Well, thank you so much for joining us, Niyi.
Thank you.
Can I call you Niyi?
Yes, you can.
All right then. Now, can we get a sense of the changing dynamics of fund flows towards real estate recently, particularly from foreign investors?
What we're seeing in the financing market is that there's quite a lot of interest and attraction to the market. It's seen as a real growth opportunity, both retail and commercial real estate, which includes commercial offices as well. We've seen quite a significant growth of capital flow towards projects in that segment. By our count, including Nigeria and Ghana and one or two other regional countries in the West Central Africa region, we're seeing flows of about $1.2 billion in the last year. I mean, alone flowing into the market, and we're seeing that from experienced, professional, disciplined investors and developers. So I think we're up for a real change in the retail landscape, or in the landscape of the retail markets, both in Nigeria and Ghana. I mean, there are quite a number of projects. Counting projects alone, you probably would number close to 17 across both countries. And what we're seeing is they're moving from not just the urban areas, the main cities, to suburban cities. So that there's a spread of the product across different parts of the country.
What segments are these investors targeting, though? I mean, is it commercial, retail, or residential real estate?
Most of the funding we see is focused towards commercial real estate. Mm-hmm. We see that the residential segments are still largely dominated by the local companies, largely because I think they would have a better grasp and understanding of the opportunity there. Mm-hmm. And they've evolved clever ways of funding projects in a market where there's still challenges in terms of how projects are funded.
All right. Well, now looking at access to finance, I mean, last year the cost of financing rates was as high as 20%, or even more for builders. And now, while local banks were cautious, given the long gestation period of 2 to 5 years before development starts to yield returns. Now, do you think the appetite for bank funding is changing now?
I think it's certainly deepening. What we see is that a number of the commercial projects, the reality is that the most successful projects, or rather the projects that can be successful, have to be funded largely in hard currency. And that's where some of our focus as a financial institution has been, supporting credible players in that market. It's not so much the low-hanging fruit, but it's clearly a market to be tapped, and there will be different strata of the market across board. For that market, the way to serve it is with hard currency, and we're seeing an increased flow even from the financial markets, or rather from the financial institutions, to supporting those sort of projects.
All right then. Well, can you also speak to the kind of projects we're likely to see going forward, especially in Nigeria and in Ghana?
We're seeing the retail centers becoming bigger. Okay. We're seeing a development of, or rather an influx of international retailers, mm-hmm. Which obviously increases the demand for retail space. We're seeing the growth and emergence of local retailers. It's become an opportunity for people to develop their own retail chains. There are a couple of the locals that have grown their chain and are improving their operations. And in my view, I think the future of retail across the West African markets will be a combination of international and local, but it will be driven a lot by the local, because there's an understanding of the market, there's an understanding of the taste, and there's an understanding of the retail dynamics in terms of what the market wants. And we're seeing some interesting things there.
All right, well, just before you go now, what about the support structure for retail, for the demand side? Are funds made available for retail tenants?
That's a good question. I think that's an area where that's an opportunity. That's the way I like to see it. It's an opportunity for the financial institutions to support that market, to support emerging operators in that segment. What typically, and in fact, I was discussing with a PE client recently, and I was suggesting that that's an area for them to actually look at, because there are a couple of well-placed, smooth operators, if you put it that way, local retailers that that PE financing behind them might actually cause an expansion and explosion of their operating model.